Hey Craig, welcome back to the dive.
Cassandra, nice to see you again.
Nice to see you too. Okay, so we keep hearing from contractors on social media the cost of materials is up nearly 300%. General Mills also recently hinted to expect high inflation out of their food products. Where do you see inflation as we move back to a normalish?
Well, I guess it depends on how you want to measure it, Cassandra. If you want to look at something like the Chapwood Index, or if you just want to walk around your own local town and check and see how prices are changing, yeah, you get the sense it's in the high single digits, if not double digits, right? However, here in the US, we made some changes almost 30 years ago, spurred on by Alan Greenspan, to adjust how they actually officially measure inflation, and that's the Consumer Price Index. And a lot of those measures, when they come out with it month over month, they exclude food and energy, which I don't know about you, but most people, that's a big part of what they have to spend their money on every month.
Mhm.
The reason they do that when they first instituted those changes in 1992 was to adjust the cost of living adjustments that all the pensioners and Social Security recipients get down here in the States. If they hadn't recalculated the CPI back then, oh my gosh, what would the budget deficit now be for those entitlement programs? But then on top of that, the markets look at it and see, well, the CPI is only 1.7%. What's the big deal? We can get away with only paying 1.75% for a 10-year Treasury note. If inflation were actually accurately measured at the official level, 5, 6, 8%, nobody in their right mind would buy a Treasury note at 2%. You're guaranteed a loss of 5 or 6% every year. So there's a big scam going on in how inflation is officially measured. At the grassroots level for you and I, obviously, it's a lot more than 1.7%.
Okay, so of course we're hearing some pushback against the recent infrastructure bill. How are you forecasting this playing out?
Well, it's going to take a while to get through Congress. They can't just jam it through like they've done the most recent stimulus plans. What was Trump was $900 billion. And then hot on his heels, here comes President Emeritus Biden with about another $1.9 trillion. This they say is what, $2.25 trillion, but this will have to go through the full congressional process that we have down here, where it goes through committee of the House and committee in the Senate, and then finally to a full vote in the House and full vote in the Senate. And then they got to get back together and try to reconcile the differences between the two. Then it has to be voted on again in both House and Senate before Biden can ever sign it. So it's I guess if anything, it's more of an indication of where the politicians are these days. We all talk about what a ridiculous notion this modern monetary theory is. The fact that they can just print all the cash they want. They cook out some treasuries and the Fed buys it all and the Fed owns it all and it's no big worry. And we joke about that as if that's crazy, but that's basically where we are. I mean, the politicians are totally no restraint at this point in
Mhm.
terms of what they want to do. This notion that, well, we have to be budget hawks and we got to, worry about the next generation. That's all. Come on, man. That's not what they're doing. They don't care. They're going to run it out there. The Fed's going to buy the bonds, print the cash to do it. And that's what even Powell has said. Powell's begging for the Treasury to issue some debt that he can monetize because he's worried about liquidity. So yeah, we'll see. It might take a while for them to do it, but they'll keep floating government plans like that to try to crank out more debt that the Fed can monetize.
So, what commodities are you the most bullish on after reading the proposed bill?
Well, it's interesting as we record this here on Monday the 5th, copper's up about 4%. If silver was up 4% today, it'd be up a dollar, but somehow it's not, which is really remarkable. All basic commodities are really cooking. Everything that's, if the dollar declines relative to all the other fiat, which is kind of a fallacy on its own, then all these dollar denominated commodities go up. And there's a lot of argument out there that, maybe there's a brand new or extension of a commodity super cycle bull market, all that jazz. Copper's done really well. It's pulled back 10%, but now it's rallying again. Crude oil's rallying. A lot of people think it could go to 80 or $100. And geez, that's not even counting on any geopolitical stuff that might happen in the Middle East. But then, like you said with your first question, Cassandra, I mean, we're seeing it, whether it's aluminum or zinc, tin, copper, lumber. All those things are going like crazy. What if we get a hot, dry summer in the US and we get a whole bunch of rally in soybeans and corn? Um, for now, let's just put it this way. For now, the one I'd watch the closest is copper. Um,
Okay.
and then we'll see, if it can break out.
So Janet Yellen is now lobbying for a global corporate tax minimum. Do you think this is achievable?
Last time I checked, Janet Yellen is the Treasury Secretary of the United States. Um, I didn't know she was a Treasury Secretary of the entire Earth, but just goes to show you what these people think. I mean, remarkable. So anyway, yeah, taxes. She wants everybody to have some kind of minimum corporate tax around the world, and I don't know. We'll see. The whole thing just is so hard to believe these days. These
Mm.
politicians are so full of themselves, and they think that they can issue any proclamation and do whatever they want, and everybody should just follow. And old Mother Yellen's no different.
So the last thing we would like to get your thoughts on is the Bill Juan drama. Do you think there are more Archegos types of funds out there? And how much of a risk is all this leverage to the overall equities market?
Right. Yeah, sure there are. I mean, we have no idea of how many little funds like that are out there, where they take a little bit of money, they're not closely looked at by the SEC or whatever the local regulator is. And with I don't even know what the word is these days. The way the system is so heavily levered and structured, you don't even know what's out there, and the ability of someone to take couple $100 million and lever it up into a position that grows to be hundreds of millions of dollars. At some point, then you get a margin call because the market moves against you. And then it's everybody else that took the other side of your bets. All of a sudden, they have a margin call. And there's no way of knowing how many of those types of things are out there and whether it can happen enough size that could upset all of the global markets. It's just like an unregulated wild, wild west at this point. And you can say, well, the regulator should be more diligent. No, man, this is another function of the garbage economic and monetary system that we have at this point. I mean, these central banks are so desperate to try to keep all of the plates spinning that they just keep the pedal to the metal, cranking out dollars and euros and yen and everything else. And then all of that, the banks, even after the great financial crisis, nobody, took a perp walk. And so all of their proprietary trading activities and all the investment banking activities that they do, they know they're too big to fail. So they're just pedal to the metal as well, just trying to make almighty dollars, and fatten their bonus pools and everything else. And so God only knows how many of these things are out there. But whether eventually it causes kind of a spiraling margin call, like the concerns were last week with this guy Juan, we'll see. I mean, we'll see if it gets there again. Look, it just makes me more and more happy to own physical gold and silver. Man, it's like, look, I know what that is. And I hold it and I own it and it's all mine. And everybody that wants to take their chances with all this other stuff, hey, knock yourself out. You might get rich in the short term, but I'd rather not go down that road.
For sure. All right. Well, thank you so much for joining us today, Craig.
It's always nice to see you, Cassandra. Call anytime.
Thanks for joining. And don't forget about that subscribe button. I'll see you next time.